We've been talking about it since 2021 when I started in the content game. We didn't think that they'd be able to cover it up, paper it over, and keep kicking the can down the road as far and as long as they have. But now the cracks are showing. And so in today's update, we're going to run through some of the data points we're getting on this liquidity crisis. The undertones of bullishness, though, in our manufacturing sector is very interesting. And then what is the catalyst going to be that allows the Fed and the Treasury to really open back up and make those money printers go burr? We're going to cover that here in today's update. All of our community resources are available at zachrector.com, and I hope that everybody is having a fantastic day out there. Let's get right on into the data. Huge news just came out yesterday, which is a private credit interval fund halting redemptions. This is a private fund that is not allowing people to pull their money out at this point. Besides what it says about underlying market liquidity, this is going to further erode trust in funds with 5-letter tickers. This wouldn't happen in an ETF. Even if everything is illiquid, the ETF trades on. You can get in and out. This is the argument for allowing privates in ETFs and why investors have shown they want it that way versus interval funds. So Blue Owl permanently halts redemptions at fund aimed at retail investors. This is the cracks that we've been talking about in the private credit market. Now, we've seen some issues in private equity, private credit, crypto hedge funds. We just covered that one Trend Research that was long Ethereum, and they ended up losing, I think, over $800 million was the final tally on that crypto hedge fund. And so we're starting to see the cracks really revealing themselves. Look who is starting to acknowledge the commercial real estate crisis, 12.34%. The delinquency rate for office loans and commercial mortgage-backed securities in January, the highest level since TREP began tracking in 2000. This is worse than the great financial crisis, by the way. The surge in defaults reflects lenders' views that mortgage rates won't go back to historic low levels and that demand for most office space has been permanently reduced. And that's just one data point that relates to real estate. I'll be dropping a 2026 real estate update here shortly. Make sure you guys subscribe to the channel and hit the notification bell so you don't miss that update. Very important to understand all of the asset classes. This is not just, hey, what's the next 10x crypto, bro? If you don't understand macro, if you don't understand liquidity, if you don't understand some of these other markets and asset classes, one, you won't be able to grow your wealth as well, and you definitely won't be able to preserve your wealth, understanding why real estate and assets like that are chosen and used to help build and preserve wealth so often, okay? So we'll be talking about that in the next real estate update. We'll be dropping Taylor Kenny from ITM Trading. 1.7 million cars were repossessed in 2009 during the Great Financial Crisis. 3 million cars were repossessed in 2025. The average new car is $748 per month. 78% of Americans commute using their cars. It's something most people have to have, right? Subprime delinquency rates are at 6.9%. Subprime makes up 14% of all auto loans. The crisis is here. The 60-day delinquency rate on U.S. subprime auto loans is up to a record 6.9%. These have doubled since 2021. This exceeds the 1996 peak by 0.9 percentage points, and the Great Financial Crisis level was a high of 5%. So by a percentage basis, we're worse than the Great Financial Crisis. We're actually worse than the peak in 1996. By sheer volume of cars that have been repossessed, we have nearly doubled, right? It was 1.7 million cars repossessed in 2009 and 3 million cars repossessed in 2025. That's nearly double. Another data point that shows us, is this time different? Oh, you better believe it is. It's a whole heck of a lot worse, and if you're not prepared, you will be left behind. Now, cue up the catalyst that allows the Fed and the Treasury and the money printer to hit reset and to make that money printer go burr. Cue up the catalyst, which, as I've been saying, is Iran strikes. Supreme Court ruling on Trump tariffs could be tomorrow. February 20th is the next date that the Supreme Court's going to rule and announce some of their rulings. So tomorrow, we could get a ruling on Trump tariffs, which could be a whammy for the markets. And then a third catalyst is the files that continue to get released much of it redacted. But as we dig in deeper, as more people get into it, we're seeing royalty step down. We're seeing royalty arrested. Well, titles stripped, they're no longer royalty, and then the arrests are happening. So we're starting to see some arrests taking place. Top presidential and political leaders, top business leaders. I hate to call them leaders anymore. They were once leaders. They ain't going to be leaders much more, as folks are starting to realize who's all implicated in the files. But we bring it back to the markets, right? If the CEO of a company gets exposed for being a bad guy, the company's going to be in some trouble. So we're watching Iran strikes. We're watching Supreme Court ruling on Trump tariffs. The files continue to get released and shared around, and the ripple effects from that. And then specific to crypto, it's the collateral death spiral. As we trade at these bear market lows, more and more hedge funds and other traders get liquidated, have to sell off positions, forced selling, which has just drove our crypto market down since the 10/10 liquidation event. So cue up the catalyst and, well, President Trump's statement. We settled 8 wars, and I think a 9th is to come.
We have a first year like probably no other ever in our country, because we settled 8 wars, and I think a 9th to come. It's turned out to be a tougher one. I thought that was going to be the easiest one. But with war, you never know what's easy and what's not so easy. But we've had a great relationship.
Now, the only question is, can we settle the war without having to drop the bombs, without having to conduct the strikes, right? So watching this situation very closely, I've already shared my downside targets on 8 different cryptos this morning with my Discord group. I told them, hey guys, you know why I think it's coming back down. Here are the targets and the range that I could see these cryptos going to. And those cryptos were Bitcoin, XRP, HBAR, Canton, ZBCN, XLM, XDC, and Flare. And if you guys are wanting to get Canton in your IRA account with iTrust Capital, that is now available. I know many people in our community have been asking when Canton on iTrust. It is now available. Got confirmation last night that it was going to be going live today. So as you're watching this, it should be available. If you haven't signed up with iTrust, or you're considering, how can I get my retirement funds into digital assets like Canton, like XRP, or precious metals, iTrust Capital has you covered. And when you use my link down below, you will get a $100 funding bonus. And stay tuned, guys, because I'm going to get their CEO on the show next week. But then I also want to do a separate video breaking down this new treasury account that they've rolled out. So this allows your business to become a digital asset treasury company. You can hold your crypto for your business holdings in a treasury account at iTrust Capital. We're going to be diving into that, and I'm very excited that they've launched that product. Now, back into the economic data here, folks. It's interesting. Big crack showing. Private credit, private equity, crypto, we're having some troubles. But if you look, there's an undertone of actual strength that we're seeing in the manufacturing survey, which tells me that we've already digested the tariffs and the ripple effects from that. And now we're just waiting for lower interest rates to really spur that next business cycle. But the economic data that came in here is very interesting. On Tuesday, we got the Empire State Manufacturing Survey. For those of you guys who forgot, we covered this on the last month's survey for January. It came in way hot above expectations at 7.7%. Now, 7.7, that's back into expansion above zero, and it's definitely not contraction, which is what they were anticipating. And so the January survey came in at 7.7. The February's coming in at 7.1. And then today, the initial jobless claims came in below expectations, so that's a strong sign for the labor market. But then the Philly Fed manufacturing survey came in, and if you take a look, that was way above expectations for January at 12.6, and it came in at 16.3. This is one of the hottest readings in a very, very long time. In fact, if I go check, I have that data point. Let me go double check. That is the hottest since January of 2025 for the Philly Fed survey. And so, like I said, we wait for one of these catalysts to finally come forward. That will give them the excuse to really drop rates back down, and will drop rates even if they just drop them a little bit further. That's going to help. But if a big catalyst drops, maybe they bring them down even further than the market is anticipating, and then they start to turn on those money printers once again. That brings our business cycle back into expansion, which is correlated with all of our crypto bull runs. That's why we're watching that so closely. Into the crypto update, CME Group will launch 24/7 crypto futures and options trading starting May 29th. That's going to be big because we're watching these CME gaps which form. What happens is the CME is only trading 5 days a week, and the CME is the biggest futures market in the world. And so what happens is when we close off on Friday and then we open up, say Bitcoin closed off the weekend Friday at 60,000, opens up on Monday back at 65,000 because over the weekend the market moved up. Well, then we're left with this CME gap down here at 60,000, which typically we always see these get filled. Now, right now, the good news is that we have CME gaps up above us. The CME gap on Bitcoin's up at 84,000. The CME gap on XRP is up at $1.74, which is why last weekend's rally up to about $1.67 didn't really surprise us. Short-term bull trap rally to liquidate people that were going short, and then they bring it back down to liquidate people that started to go long. But the CME gaps are sitting above us right now, which is good. But here down the road, there won't be any more CME gaps, and it just adds more liquidity. 24/7 access to crypto futures is a very positive sign. Some would argue that now institutions can manipulate our markets 24/7, but I just think that it brings in more liquidity, which is overall healthy long term. Okay, and remember, just like they're suppressing and manipulating prices down, right? We covered it yesterday. Jane Street, one of the biggest market makers that comes in every morning at 10 a.m. and just smacks the crypto market down. They were the second largest purchaser of the IBIT in Q4 of 2025, the BlackRock Bitcoin ETF. So the same assets that they're smashing down with their manipulation, they're also scooping up at a record pace. That's how the game's played. We're not going to fight it. We're just going to invest right alongside them. Okay? Now, bullish sentiment turning positive on XRP, while sentiment has turned bearish on Bitcoin and Ethereum. This is from Santiment. XRP hits a 5-week bullish high driven by recent partnership announcements, and this is coming from Santiment, excuse me. So, and we've seen this, right? The outflows continue out of the Bitcoin and Ethereum ETFs, and the inflows continue to come into XRP and Solana ETFs. And so, bringing it back to that business cycle expansion that I'm expecting here later this year, that's when we see the rotation into the altcoins. That's when Bitcoin dominance is going to drop. And that's when XRP is going to be on its way to a new all-time high. Absolutely ready for that moment. And we're absolutely ready for XRP yield. Vitse Vin from Zaman. 3 XRP yield providers almost ready to launch straight from your Zaman wallet home screen, showing your deployed capital in your home screen asset list. Who's going to be the first to go live? Which one are you hoping for? So, talk with the team at Ripple Swell Conference in November. Robert said that they are working on the one-click or one-swipe solution for yield on XRP. And it looks like they're not just going to be partnering up with 1, but 3 yield providers for XRP. My guess would be Flare, which Flare just hit 100 million XRP vaulted for the Flare ecosystem. Massive milestone. I anticipate that the other one will be Doppler, and maybe Soil will be the other one. So that's going to be 3. I definitely anticipate Flare and Doppler to be 2 of them. We'll see who the third one is. But let me know in the comments down below who you think the yield provider will be through Zaman. Absolutely love to see it. Zaman is one of our favorite self-custody wallets for XRP and the XRP Ledger ecosystem. So check them out. It's completely free to get your Zaman wallet set up if you do the self-custody deal. We like to do a mixture of self-custody and institutional grade custody over here. But yeah, this is where we're at in these markets right now, just waiting for the big catalyst to hit, praying for peace. Obviously not a fan of striking Iran or getting involved in more, external affairs of other countries. But doesn't matter what my opinion is. We're just going to position ourselves accordingly, which is having our limit orders placed, adding to our fundamental positions, and lining ourselves up and preparing for that business cycle expansion that's going to come after the catalyst hits, money printer goes burr, interest rates come down, and full risk on appetite will be back. Rotation to crypto alts will be here, but the focus is going to be on cryptos with utility. XRP will lead once again, just like they did after the President Trump election victory in November 2024. Our biggest winners were XRP, XLM, HBAR, and that's why I have them listed on the list of targets that I shared with my Discord group here today. If you guys want to get tapped in with our Discord investment community, sign up through Patreon to get access to Discord. We would love to have you there. And then just go to the trading channel to get the 8 charts that I shared with my Discord group, which has our downside targets for all 8 of those cryptos, okay? Everything else is at my website, zachrector.com. On the way out, if you could help us out by liking this video, sharing it out far and wide, we would greatly appreciate that. We'll see you in the next one. God bless you all. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.